What's up, everybody? Nate here. So Americans over the last 2 years have had a lot to worry about. From inflation to debt rising to mandatory payments, like mortgages starting to resume again. Pretty much everybody is super stressed out. In fact, a recent poll from CNBC showed that around 25% of Americans are financially stressed every single day. Now that stress has put a lot of pressure on Americans to make changes to their everyday lives so they can survive financially. Habits are changing for everyone. The way that we interact with money and the way that we spend, invest, and save is also starting to change. But these habits may end up changing our economy a little bit too much. But what's happening right now is that stress and pressure is turning into fear for a lot of Americans. Many Americans throughout the country are just scraping by, and because finances are so tight, they just don't have the means available to start preparing for tomorrow. This has led many organizations like the International Monetary Fund and the World Bank to estimate that the United States economy is actually going to shrink in 2022. Instead of growing at a rapid rate like we saw in 2021, it's actually going to slow way down. And that means that our money is on the hook here. So today, I want to take a minute to talk about everything that Americans are stressed out about right now, what that is going to mean for the future of our economy, and if there is anything that we can do to stop it. But before I get into all of that, do me a quick favor and hit smash or destroy that thumbs up button below and ring that notification bell too. Both of those two things are completely free and they help to show me that you like this video and that you want to see even more just like it. Thank you so much for doing that. And now I first want to go over what Americans are stressed about. The first and foremost is inflation. Inflation over the last year or so has spiked steadily. Every single month we've seen inflation hit new record highs. Just last month in March, inflation hit an over 40-year high of around 8.5%. That means that the price of everything is starting to rise in our economy. From the cost of living to the cost of everyday goods and services, Americans now have to pay more for all of the same things. And what's crazier is it's not even like things like goods and services improved over the last 2 years. Americans just now have to pay more because demand and supply is so high. Now that stems all the way back to when the pandemic started in March of 2020. The United States federal government printed trillions of dollars in stimulus because we didn't know what was going to come next. Americans weren't spending money because many of them were out of work. And 70% of our economy is driven by consumer spending. So if Americans stop spending money, then that's an issue. So there was so much money circulating throughout our economy that Americans had money to spend, at least in the short term. Now a lot of that money has started to disappear as the Federal Reserve has pulled a lot of its stimulus and now they're starting to raise interest rates. So demand is coming down. Now one good thing that we've seen in our economy so far is that consumer spending is still keeping steady. And consumer sentiment for the most part is going up. Now because of this, Americans are still spending a lot of money. The problem is many Americans are now getting way too far into debt. Because so much stimulus came out in 2020 and in 2021, Americans were able to pay off things like their federal student loans, credit cards, and any other type of debt. With a lot of those balances on credit cards now completely empty, a lot of Americans are now turning to them again. And there are two major reasons for that. For one, Americans now have a lifestyle that they need to keep up. Like I said, with so much stimulus in 2020 and in 2021, Americans spent a lot of money. Not only that, but Americans became a lot wealthier in 2021 because asset markets like real estate, commodities, and the stock market also hit new record highs. So there was a lot of money flowing around. Obviously, Americans are used to spending money on things that they want, but also Americans now were used to spending even more than usual. So with inflation going up and wages not really going up to meet it, Americans now have less, but they want to continue living that life that they did in 2020 and in 2021. So many of them are choosing credit cards, and because credit cards for a lot of Americans are empty, this seems like a really good way to go. It's basically just an extension of your income, right? Well, that is wrong for a lot of different reasons. reasons, but this is going to get a lot of Americans in trouble as interest rates begin to rise. The Federal Reserve announced in March of 2022 that they were raising their benchmark interest rates by 0.25%. This is all in a response to inflation. They want to raise their interest rates so it's a lot harder for Americans to spend money. That will equal lower demand, and with people spending a lot less, there's less money flowing throughout the economy and businesses can stabilize prices. But it also means that Americans now have to pay a lot more for things like a mortgage. Because banks get their money from the United States government, it's harder for them to loan out money because interest rates are going up. They raise their interest rates, and most credit cards come with an adjustable rate on them. That's great if interest rates are low. You're not going to pay as much in interest, so your overall monthly payments remain low. However, if interest rates go way up, then Americans now have to pay more on those credit cards, which means that debt balance you have on your credit card is getting a lot more expensive. So Americans are worried about debt. And remember, over the last couple of years, many Americans became homeowners because interest rates were so low and prices hadn't spiked just yet. Many Americans took that as an opportunity to buy a house. For many of them, this was their first house. So many Americans weren't used to paying a huge monthly payment just to live in a home, but now they do. And you're probably thinking, well, if you get a 30-year fixed mortgage, then what you pay on your house isn't going to change. So how is that now a concern for Americans? They should have worried about that before they bought a house. It's not my fault that they can't afford it. Well, this is true. A 30-year fixed mortgage means that the interest rate that you originally got for your home is not going to change over the lifetime of that loan. What will change though is two major things: inflation and taxes. Every single American pays property taxes on the home that they live in. Property taxes are usually determined by other housing prices around you. If the value of homes in your area is starting to go up, then you can expect your property taxes to rise every single year. The reason is because your home, even though you're not selling it, is worth more right now. So just for living in your house, you might have to pay an extra $100 to $200 in 2022 because property taxes are rising. Obviously, property taxes can go down, but this is pretty unlikely. And it really is all tied to the housing market, and we are not expecting an outright crash in the housing market anytime soon. And of course, inflation. Americans are trying to budget their money right now, but it is extremely difficult. That's because the prices of things are going up every single month. Americans don't know what something is going to cost a month from now, so how are they going to budget for it? Every single month, that is eating into Americans' budgets, which means they have less money to pay off debt, less money for the things that they want. Now, like I said at the beginning of this video, this has led many Americans to become fearful of what's coming next. So we're starting to see large populations in the United States actually saving a lot more money than they are investing. Now, don't get me wrong. The Americans that are investing their money are investing at a record rate right now, but the Americans that aren't investing are saving more than they ever have. And the reason for that is simple. Americans that are saving a lot of money are afraid to invest their money because investing is never guaranteed, and they're already losing so much money to inflation, and the cost of living is going up that they don't want to lose any more. I completely get that, but in the same breath, not investing your money means that your savings and every dollar that you're earning right now is losing more value. I've seen a lot of reports of Americans doing something called cash stuffing. Now, cash stuffing is essentially taking your money out of the bank and actually putting it into a series of envelopes. Each envelope has a different purpose, and it's a way for many Americans to budget their money. So for instance, you take $10 every single week and put it into an envelope for your energy bill or for gas or anything that you need. And for me, I've seen this a lot, and it really makes sense why millennials are starting to do this right now, because it goes back to how we were taught about money. My generation was taught to work really hard for everything that you want in life, and that includes money at your job. So taking your paycheck out of the bank and getting physical dollars for it, for a lot of people, makes you tend to spend less money. When it's in a bank account, it's literally just numbers on a screen, but when it's in front of you, you don't want to lose all of that money. So Americans put their money into envelopes so they can save a lot more. And don't get me wrong, I think this is a great way for a lot of Americans to save on a short-term basis. However, as a foolproof long-term saving plan, this is one of the worst ways you can handle your money. Simply put, this can be a dangerous way to hold your money because, for one, you could potentially lose a lot of that money. It could get stolen, or you could eventually get so much of it that it just ends up everywhere throughout your home. Number two, you're not earning any interest on that money. Traditional bank savings accounts have a terrible savings rate, but at least you're earning something. And there are some new age banks that actually allow you to earn a much higher interest on your savings. So even though you're not investing, your money is still making you money. And you can have multiple different accounts at a bank. You don't just have to have one. So you can set up multiple different accounts for all of the different things that you have in life. Moving money out of banks for many Americans has been a much bigger phenomenon than just something happening in 2022. Americans right now don't trust any major establishment like corporations, large banks, and even the United States government in some cases. We are seeing a big shift away from traditional finance to non-traditional means. This goes for investing and spending your money. Now that's bad for banks because the way that banks make money is by taking the savings that you put into a bank and then loaning that money out. So the more money that you put in a bank, the richer the bank gets. Of course, if you go to the bank and you want to pull your money out, they have to give it to you, but they've already loaned out the complete balance. The money you're getting back is technically not the same money you put in. That could lead to a lot of other problems for the banking industry because if Americans are putting a lot less money into banks, then it's going to be harder for banks to lend out money, which means interest rates will go up higher. But the bigger thing that we need to discuss is all about cryptocurrency. Cryptocurrency has exploded over the last 2 years as the non-traditional way for people to invest and the non-traditional way for people to spend. Recently, the payment company Strike partnered with point of service payment brand NCR and Blackhawk Network to create a brand new system for Americans to essentially spend their cryptocurrency. This would involve things like Bitcoin, Ethereum, and Dogecoin. Now, all of a sudden, millions of restaurants all throughout the nation are going to have access to the blockchain, which means they can start accepting Bitcoin and Ethereum and Dogecoin as an acceptable form of payment. That completely shifts how our economy works because now a lot of Americans aren't relying on US dollars, they're relying on cryptocurrency. And many Americans consider this to be the future of money anyway. So as the traditional means of our financial system start to die, we're going to start seeing brand new ways to save and invest come out. And they're starting today. Now, what I think this could really lead to is our economic systems actually working to benefit everyday Americans instead of your large traditional banks and corporations. That creates a financial system that works for everybody. And in the long term, that is a great thing. Americans in the short term, though, have to be really careful with their money, though, because many Americans are afraid of losing it. Of course, the Americans that are spending are still spending large amounts and are driving our economy right now. But that's not everybody. Not everybody is spending a lot of money. Many Americans are saving their money. Many Americans are investing, and even more of them are doing both. I can't speak for your individual investing and saving plan here. Some things work for certain people and other things just don't. Do what makes the most sense for your financial plan and your long-term goals. I'm not telling you to never save your money. Saving has a place in our economy. You need a short-term saving fund in order to protect yourself, and you need long-term savings in order to buy the things that you want and protect yourself on a large scale. But in today's economy, it makes no sense to continue to save for a very long time. And I'm afraid a lot of Americans are going to be stuck in this system where they've saved a lot of money, inflation continues to eat away at that savings every year, and their paychecks are not getting any bigger. They're spending a lot of money on credit cards. I mentioned before people spending money on credit cards for the things that they want to continue their lifestyle, but there's a lot of Americans that are going into debt simply because they don't have enough money right now because of things like inflation. It's more important than ever before for your money to make you money. That's why in order to do that, you have to invest. And I'm not saying you have to invest in one single thing. Do what makes the most sense for you. Look into things like real estate investing and commodities and cryptocurrency and the stock market. You might not start to see noticeable change right now, but eventually you'll start to see that your money is gaining you money and that there was really nothing to be afraid of in the first place. But the bottom line here is this: our economy is changing again, and in order to be successful and to go along with the future of money, you're gonna have to change with it. But now I want to hear from you on this issue. What do you think about all of these changes coming to our economy in 2022 and beyond? Do you think that Americans have every right to be financially stressed right now and avoid things like investing? Or do you think that Americans have to do whatever they can in order to grow their finances? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all of the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.